Welcome everyone. I'm here today with Greg Luscombe. My name's Anthony Pearson and we're going to provide you with a bit of a brief of the federal budget which dropped last night, if you were lucky enough to tune in. Safe to say, Greg, though, there wasn't a huge number of over-the-top announcements or shocks.
No, Anthony, it was relatively quiet, few surprises. I was going to say one eye on the election, but probably both eyes on the election that is just around the corner.
So regardless of no huge announcements, we will take you through what did happen, and I'll start off by leading you through the business space. No extension or mention of the $20,000 instant asset write-off, which we've got used to in the last few years. No mention at all on that one. So we're presuming that's coming to an end. So that's the ability to buy an asset under $20,000 and write it off 100% for depreciation purposes. And there's a proposed ban on non-compete clauses, which might affect businesses as well. And that is affecting those earning up to $175,000. So in your employment contract, we can now no longer lock them in. And that has the intention of allowing them to move employers or establish their own business, which the government wants to encourage. In the individual space, there's quite a few new measures, but they're very minor in effect. So the government's focusing on cost of living, and the first one is a little bit of a surprise tax cut that we weren't perhaps expecting, but the effect's only going to be minor. So you'll see the headline and perhaps that will excite you, but when we dig down, it's reducing the tax bracket from the $18,000 up to $45,000 mark, and that's currently taxed at 16 cents in the dollar, but it will drop to 15 cents from July 2026 and then down to 14 cents in the dollar for July 2027. Now, the total tax saving, if you're earning $45,000 or more, is only $270. So, okay, it's handy in the pocket, but it's not going to make a huge difference. And then another $270 in the second year. So cumulative, you'll get $500 less tax with these changes. Those on low income level also won't have to start paying the Medicare levy until we now reach just over $27,000. So there's a small uplift to Medicare levy threshold, which again puts some money back in our pocket, but the effect is very, very minor. So again, nothing to get too excited about. If you're a student, there's a bit of excitement because your help debt will potentially be reduced subject to some passing of legislation. So the government intends to reduce students' help debt by 20%, which is, quite significant. And the other good news for students with student loans is that the threshold that you can earn before you have to start paying back your student debt is going to be increased to $67,000. And that currently sits at around about $54,500. So that's quite a significant increase that you can earn without having to pay back those help or student debts. Couple of other minor cost of living things. There's reduced medicine costs in the pharmaceutical benefit scheme. So they've capped those costs for pensioners, and the maximum cost comes down from about $31 to $26. So that will affect the number of people, and some childcare benefits. So parents from January 2026 will be guaranteed a minimum of 3 days subsidised childcare, regardless of how much you're working or studying, as long as you're earning less than $500,000 per annum, which I think most of us fall into. Greg, on the super and social security space, again, not much happening, but a few things you need to mention.
Yeah, Anthony, you're very quiet on the superannuation front, which to some extent is nice. I read that the word superannuation was only mentioned twice in the whole 91-page document, which is probably a little bit unusual, but it's probably what wasn't mentioned that we need to just touch on, because there is some existing super changes that are already in progress that there's been no sort of change to that progress. One of those is the super guarantee for employers paying super on wages. That increases in 3 months' time, end of June, to 12%, which is the plan that's always been in place, and that will kick in from the 1st of July. Also, the quarterly maximum contribution base, which doesn't apply to a lot of people, but that will actually decrease from the 1st of July to I think about 250,000. So it's just something to be aware of. Secondly, the contribution caps for next year are unchanged, still 30,000 for concessional contributions and 120 for non-concessional. So there's no movement on that. There is some movement on some thresholds from the 1st of July. Transfer balance cap and the total super balance are both slightly increased. Transfer balance cap to 1.9 and the total super balance to 2 million. Now they're already in train and there's obviously no change to that. Probably the big one is in relation to the controversial, what we call Division 296, which is the proposed extra 15% tax on super earnings where your super balance is over $3 million. There's currently legislation in Parliament. It's before Senate, but it's not going anywhere. And will lapse if the election is called before it's passed, which is most likely. There's no comment in the budget about suggestion as to what will happen, but it will presumably continue to be policy of the Labor government, as there's been no mention of it not being. And that involves the controversial method of calculating earnings and taxing unrealised gains, which it'll be really interesting to see what happens in the election debate around that 296 issue. So we'll have to sort of watch that. In relation to Social Security, again, no new announcements. Again, some uncertainty around, in this case, the deeming rates. Currently, they've been frozen at the pandemic lows of 0.25% and 2.25%, and that's set to finish at the end of June this year, 2025. Now, those rates are sort of now out of historic sync with the RBA having increased rates. So it's likely that there will be an increase, although some media reports are suggesting the government wants to continue the freeze, but again, no comment on it, so I really don't know. However, if the deeming rates were to increase from the 1st of July, then certainly some Social Security recipients will see a reduction in their payments. And perhaps that's why this bad news wasn't addressed just before an election. The government actually has until the 30th of June to make a call on it. Again, it'll be interesting to see whether that gets raised during this campaign period, but certainly will need to be addressed before the 30th of June. And if they do go up, then there will be people impacted, and obviously we'll need to perhaps seek some advice about what they might be able to do to counter that. And then finally, in the aged care space, again, not a lot of information in the budget other than allocating a little bit more money to aged care funding, which is positive. There are already in train significant changes to the way the aged care funding system works for people from the 1st of July. That was previously announced. We won't go through that now, but we are looking to run an in-house workshop in the next few weeks and months for clients and friends to explain these changes. So people should look out for that.
Yeah, great. So, look, not a huge amount of news, but I guess it provides some certainty in that not a lot has changed as well. So, one thing we can speak about with some certainty is just from the taxation point of view across my desk is the increased tax office funding and also activity. So we've already seen it as far as in the last 12 or 18 months that the tax office have stepped up and they're auditing not just big business, but small business and individuals on a number of topics. And there has been, as part of the budget announcements, these are big numbers, but $999 million over 4 years to help expand that tax compliance activities. Now, look, a lot of that will be targeted at multinationals and other large taxpayers, but there's specifically $75 million targeted towards personal income tax compliance. So that really does potentially affect anyone lodging a tax return. So it's just a matter of making sure we're confident and you're ticking off on everything that you're lodging and meeting all your lodgement obligations. Of course, Greg, what do people need to do if they want some assistance on any of these matters?
Well, we're always here to help, obviously. There's not a lot necessarily that came out of the budget, but there might be things that will come out in the election campaign from both sides that do need to remember that until there's an election and we've got a government and we know which side's in, and then we get the legislation through, nothing is changing. So we just need to keep an eye on that. But if people want advice, then our advisors are here to help as far as we can. And we'd love to see people.
No worries. Thanks, Greg, and thank you, audience, and we'll see you soon. Keep tuned to the MB+M socials for updates and announcements. Thanks, guys. Bye.